Hey, welcome back to Tuesday with the Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're going to recap some of Michael Burry's recent tweets, and we're going to talk about how this week is a very, very crucial time, particularly for some of our bearish bets on the market. We're going to look at a little technical analysis and recap some of the news related to that and news upcoming this week.
This is it, dudes.
Tuesday with Guys Trade Stocks.
All right.
All right. Well, first of all, he didn't actually say this is it. We're saying this is it, okay? But
I'm
this is kind
saying.
of funny.
I'm saying this is it.
This pretty much, I think, confirms what we were, Michael Burry does watch our channel. We talked about the 1.7 meter thing in our last video about him not being short, and he came out on Twitter and said, actually, I'm 6 feet tall, not 1.7 meters, which was only 5'7". So he's definitely a fan, probably down in the comment section below. I'm just saying.
Yeah. If you watch our last video, you'll know what we're talking about. All right.
Yeah. So, he had this classic kind of trend of deleting his Twitter and reopening his Twitter, deleting his tweets. He's always been kind of going back and forth on that. And he kind of finally explained why he has been doing that for a while, which was kind of interesting. He talked about how he does it every time he's been canceled personally or professionally, which I thought was interesting. He's definitely a very vocal, politically kind of, so what I want to say, divisive person. So it makes sense that he gets a lot of criticism. But like it's kind of a unusual backlash, I guess, to just go ahead and catch your Twitter. It makes no sense to restate it 2 days later. That's what he did.
Yeah. I don't know how much that's actually accurate. He just gets angry, deletes it, and brings it back. And I mean,
Yeah.
how long did he delete his? Two days?
2 days. And before that, he had actually put this other tweet out here about saying, "Oh, I won't delete anything going forward. That Elon has my trust." And it was funny because this other Twitter account, Michael Burry Archive, which has been a great resource for us, we go back and get his old tweets there all the time. It had put up this Twitter post with over 10,000 votes on it, and saying 93% of the people were like, "No, no, no, keep this page alive. Like, don't trust what he said."
Yeah.
They were right.
That's pretty outrageous because 2 days
Yeah,
later, downsies. All right.
exactly.
Let's get into the meat here. Bunch of stuff happened in the market. All right. This is a little bit old. All this is saying is that credit card debt hit 930 billion, climbed more than 15% from a year earlier, which is the largest annual jump in 20 years. Not a lot of great stuff happened 20 years ago. Well, I guess slightly less, but high inflation and high interest rates are making it harder than ever to pay down credit card debt. The real problem that credit card debt is, why this is, I guess I should say, why this is more important than ever before is because we have not had interest rates this high since the 90s, since the mid 90s, all right, for where we're going. So the amount of credit card debt is not great, along with some other factors. Next slide, please.
Yeah. So Brian Moynihan, the CEO, I don't know if you saw this of Bank of America came out this week and talked about that too. Talking about the health of the consumer being poor, and
Yeah.
they have all those internal metrics where he can really see how people's bank accounts are tracking and where the expenses are going. And he did not have encouraging things to say.
So the health of the consumer is poor, but consumer sentiment improved to 59.1 from 56.8. They're expecting 53.3 from the University of Michigan's Consumer Confidence Index. Now I know what you're saying. Who cares? Valid question, and I'll get to that. But the Producers Price Index also showed higher than expected wholesale prices, and the jobs report slightly better than expected. I mean, kind of in line, slightly better. We hired a greater number of workers, and wages increased. Now, the weird thing, I day trade. I've been pretty open about that. I know it's kind of frowned upon.
Yeah.
When these numbers come out last year, before anyone cared about 90% of this, because the market was seemingly going to go up for the next 100 years, there wasn't like a lot of volume. No one cared. Like even day trading on like a 1 or 2 minute candle, there wouldn't be a substantial volume spike. Now, any number that comes out with a even minor relevance to the number has an effect on the market. Like the University of Phoenix could start like a metric of some sort that doesn't matter, and the stock market will pay attention to it. So
Oh.
we're at a point where it's like we're on a tipping point of volatility. So
Yeah.
it's really, really important because, Vinny, what did my man Powell say? Just like quick summary
So
last.
he did actually come out and be relatively kind of accommodative, if you will, and saying that he thinks that a soft landing may be achievable, that we may not have a dramatic loss in jobs compared with prior kind of economic downturns because we lost a significant portion of the labor market. But this wage inflation is seriously a concern, right? If wages are still going up, that's more buying power in people's hands. People are demanding more wages, therefore they can continue this inflationary cycle, which is why when that PPI number came out and was a little bit elevated still compared to what was expectations, the market did not like that and responded relatively negatively to that news.
Right. Now, he also said that there's a chance that the 0.75 rate hikes are over. Okay?
Yes.
And he said
Yes.
it could, not it will, it could end as soon as this December. Now, these are the two biggest dates. This is why we have the "this is it" on the thumbnail. Okay? Wednesday, December 14th, market expects the Fed to raise 0.5%. Okay? Now, he was saying it is due to certain metrics. He was not saying it's definitely going to be 0.5, but you can pretty much guarantee one of those certain metrics is the day before, on the 13th, CPI data for the November, as well as the jobs report that was released that showed we're still doing fine job-wise. Okay? Even though you have the headlines of like Meta and Amazon and Twitter laying off people, people are still getting jobs. All right?
Yeah.
It's incredibly, incredibly important. This next week is going to be the week you want to look at. I have the SPY here. I'm still short, quite short, uncomfortably short, if I'm being honest. We did not break the trend line, so I stayed in. We came right down below this 200 average. That's this gray line right here. If Jerome Powell does a 0.75 hike, okay, which if you type in right now into Google, how much are they going to hike on December 14th? Every single site is 0.5, all of them. Everyone
Yeah,
thinks
it's like
this is a done deal.
70-80% somewhere in that ballpark the last time I saw it. And like there's still an
It's
option
wild.
that 0.75. And like the market is not anticipating that at this point. If he does that, you're gonna see some big red candles, I suspect. But I'm just a stupid guy.
Well, so I mean, so he talked beginning December right here, saying that how hey, we could be good to go here, and it brought us all the way from friggin' 394 to what is that, 407? 407.
Yeah.
So if we have a 0.75 rate hike, that could be the capitulation event. It's very possible where we just crash, all hell breaks loose. Dylan's very happy. Sorry, guys. But it is definitely something to look at. We're still trending kind of in this trend line here. I'm still thinking that we're going lower, but who knows? Anything else, Vinny?
No, I suspect the same thing. Just we'll see what happens this week. But the market is so certain it's getting that 0.5 right now that I'm less convinced. That I'm sorry. So if we get that 0.75, it could be a major market down day. We'll see.
Yeah. Great day for Dylan. All right, guys. Have a good one.
Catch you next one.